Bizworld. Foreign investors continued to be net sellers during the holiday shortened trading last week, disposing of 186.2 million ringgit worth of equities. In its weekly fund flow report, MIDF Research believed that the net selling stemmed from higher than expected inflation data in the United States, prompting investors to expect another aggressive rate hike by the U.S. Federal Reserve. It noted that local institutions turned net sellers again last week, albeit at a much lower rate of 4.7 million ringgit. Meanwhile, local retailers turned into net buyers again at 190.8 million ringgit. Year to date, international investors have been net buyers for 24 out of the 37 weeks, with a total net inflow of 7.93 billion ringgit, while local institutions were net sellers for 29 out of 37 weeks, with a total net outflow of 9.91 billion ringgit. Bursa Malaysia Derivatives hopes its newly enhanced gold futures FGLD contract will increase the market's attractiveness. It expects 62,000 lots to be traded in 2023 with an average of 250 contracts daily.
The thing to think about when we look at the derivatives market, Malaysia is a commodities market. That's a strength. We're known, particularly with ASEAN. So this is rounding out our product offerings. We see this as a contract that will be attractive to retail investors as well as institutional investors.
The FGLD contract has been enhanced to provide investors with immediate exposure to international gold price movements. The final settlement value of the enhanced FGLD no longer requires any foreign exchange rate adjustment, given that the contract's fixed multiplier already serves as the rate to compute the ringgit contract value. The final settlement price is determined by the London AM fixed price, which is the internationally recognized gold benchmark price. Malaysian Communications and Multimedia Commission via the National Digital Network Plan Jendela has reached 95.82% 4G coverage in populated area in the second quarter of the year. Its COO, Dr. Muhammad Ali Hanafiah, said its first phase of Jendela target is to achieve 96.9% by year-end. Phase 1 cost has expanded to 28 billion ringgit from 20 billion, with 60% being funded by private finance initiative and the rest from the government via the Universal Service Provision Fund. Meanwhile, total network complaints have reduced significantly in the first half of the year. It recorded 66% lower to 40,000 complaints compared to over 120,000 last year. Next, consumer sector expected to be the biggest beneficiary of the upcoming budget 2023. According to RHBIB, some of the more predictable goodies such as cash handouts, bonuses for civil servants and income tax relief can be expected, especially in view of the rising cost of living. The firm also expects the government to continue prioritizing the B40 segment's welfare through the provision of subsidies for necessities and monetary assistance. Additionally, it expects the budget to emphasize automation, technology and sustainability. However, the investment bank has low expectations of significant incentives for the property sector, given the government's announcement of the Keluarga Malaysia Home Ownership Initiative in July. RHBIB also said the automotive sector may receive incentives to expedite electric vehicle production and adoption. Small and medium enterprises (SMEs) are hoping that the government will increase grants and facilities for automation and digitalization in Budget 2023 to help them transition to Industrial Revolution 4.0 and rebound from the pandemic. Chairman of the Small and Medium Enterprises Association of Malaysia, Dr. William Ng, said a cohesive and structured approach is needed to support SMEs in automation and digitalization. He added that the provision of grants will help empower their business post-pandemic. The association hopes that the government will increase grants for automation and digitalization via agencies like Malaysia Digital Economy Corporation and SME Corp. And that's all the time we have for Bizworld. I'm Muhammed. Ahmad Hamdan. Thank you for watching and keep tuning into TV3.